Well, a very good afternoon, everybody, and welcome to our Rubicon indicator training for Thursday, August the 4th, 2011. My name is Frank O'Connor, and very happy to be here with you guys this afternoon. Boy, we have had one heck of a week in trading, regardless of whether you were trading our beautiful Forex market or you happen to be over trading commodities, stocks, bonds, futures, options. It was a heck of a week so far. And tomorrow we have NFP, so the fun continues. A couple of very important things I want to bring up about that type of price action, guys. Mentioned it again earlier on. Harry and I were speaking earlier today. Just a couple of things to know. What we're seeing right now, particularly in the majors and particularly in the euro dollar, pound dollar as well, is not the norm. This is not what we normally see from these currencies. These types of moves, like today on the euro dollar, that's a 300 pip move, not the norm. And again, a couple of days back, we had another close to 300 pip move. Yesterday, in the opposite direction, which really makes it freaky, we had a 230 pip move. Now, for a currency that's normal daily range is about 100, 110, maybe 120 pips, that's double and treble what it normally does. So be careful and be cautious out there, traders. My recommendation is to get off the roller coaster and go to a slower currency like the Euro GBP until this thing calms down a little bit. The difference, even though they're both euro currencies, let me show you what I mean by the difference in those currencies. Here's our price action today on the GBP, Euro GBP. 90 pips as opposed to 300. The entire price action yesterday, top to bottom, was 65 pips. On Tuesday, 65 pips. On Monday, another big day, 81 pips. I think you get my drift. While these markets are tumbling and doing crazy things, we got to kind of get to a safe harbor ourselves, and that's my recommendation. Get down to that Euro GBP, because what we're seeing is indecision, uncertainty, and fear right across the board. I mean, the stock market dropped 500 points today. Oil, petrol, gasoline, whatever you want to call it, dropped significantly again today. Commodities. So we're seeing, massive gyrations in the market. And that type of emotion, believe me, carries over into the Forex market because people are using our currency to buy and sell product. So that's point number one. Very, very important. Now, to give you a further example, let me do this.
Sell signal occurred.
Stick it out to a daily chart. Actually, 4 hours a little better. No, actually, I'll go to a daily chart. If I go back in time here a little bit, let me do this. You know, 2010. We're back to normal daily ranges, 111 pips, just under 100. These are daily ranges, 70 something pips, and then a big ranging day would have been what we see there, about 140 pips. So you see these normal ranges that were going on back in 2010, 80, 90, 100 pips, out to 120 pips. Bring it over here, even December. As we head into this year, we're still in that 90 to 120 pip range. 120, 116 pips, 120 pips. But now we get over closer to where we are now, and these ranges are getting a little out of hand. 1, Oh, I'm on, sorry, wrong currency. Let me do that again. Sorry, guys. I'm like, what's going on here? Let's blow it up. Let me take her back in time now. That's back to euro dollar. Oh, come back in time for me, please. There we go. September 2010. About 150 pips. Under 100. 150. 120. And then a couple of very small days there. You see them 60, 70 pips. That's more than, so 120 being around the norm. 90, 100, about 150. And then we come up to now on the euro dollar. Today, there's that 300 pip plus day. You know, you just take your pick here. 250, 200, 250. These big monsters out here. 370. Close to 300. Anyway, you get my idea. This is what's been happening. So since the last couple of months, I've noticed this is very big, wide-ranging market that we're seeing in the euro dollar, and the same thing is applicable in the pound. So that's what I'm telling you. You know, get back to the euro GBP, guys. Now, the same rules apply. Our system is intact. We do exactly the same thing, regardless of what currency we're on, or indeed what time frame we're on for that currency. So let's do our homework here. I have some lines on because I was trading it this morning. And to give you a further example, on our Skynet and the professional EA for money management, moving forward with professional accounts, I just ordered the EU off the charts for the moment until it begins to settle down. So we're not trading the euro dollar right now. Now, on a clean chart, let's start clean. These are markers that I had on the chart already, but I want to start clean with you guys. First thing I want to do on my daily chart is look. This is the euro GBP. I want to get about, good year and a half, maybe 2 years of price action. Look for the trend, and in that course of time, even though from here to here it's up, actually I'm going to draw that more recent trend. So from May, at least a year, over to here, we'll draw the Fibonacci right there. On our yearly chart, daily I should say. And you can see right now, there she's hovering around that, just below, trying to break that 38 fib. And it spent a lot of time here. Look back at the whole month of May, it was hanging around this number. So significant number, that's the first thing we notice. We also notice some resistance close to that level back in January, February. And the other level I want to notice as we're heading down, looks like we have some support right here. That was resistance back in January. So that's applicable. Again, back to that rule you've heard me talk about several times, guys. Always look to the left of your chart. For guidance, look left. Instead, when you're teaching our kids to walk, across the road, what we're saying in Forex is for guidance, look left. Don't do anything without looking to the left of the chart. Look for those support and resistance levels. And there's that new fresh cross here on the Euro GBP, on the daily chart now, that is, daily chart. And the other thing I noticed right here, and it's in play, getting close to being in play right now, is the trend line that actually goes, well, let's take it from here actually. And she's about to come into play right now. The other trend line is straight, like a straight rock down, so you can see the pullback. And again, the other thing I noticed before I leave the daily chart, guys, is that we are south of the spine. Currency has turned over. We're south now. Remember, as a caution, in May, it looked like it was breaking through. However, the note back in May, and let me blow it out just a little bit. Where's my May? Yeah, right here. Is that our blue line, our aqua blue line, or the
Cell signal occurred.
excuse me, get rid of that MA there. That's doing in there. The blue aqua line, or our railroad track, never broke through. So it made an attempt right there and never broke through. However, now we have the railroad track coming through. Sorry, that phone. The railroad track is coming through. What you're hearing there is the audio coming through on my chart, cell signal, but it's also coming through as a text on my phone, which is that new update I was telling you guys about with the Rubicon. The signal service coming now in line with the Rubicon. So as I get a signal on the chart, I'm also getting a signal on my phone. So we haven't left the daily chart yet, guys, and you can see some very, very vital and important information already picked up. Now let's go down to our 1 hour chart. And you can see strong trend from the high back in July 26th. Let's squeeze a little bit more. That high on July 26th, she just ran down. It has already broken the previous low over here. Take a note of that in case it's become support again. And that also happens to line up nicely with our 32 fib on the daily chart. Now we're below the 32 fib on the daily, so I'll actually bear that in mind, but I'll remove that daily fib now. But just before we remove it, remember we're just below the 38 fib, and I have it marked anyway as a previous low. Right there. Now back to my 1 hour. So here we are. Possible previous bottom down here, 8610, close to the 8600, and it's possible ceiling or resistance now above me at 8700. So the numbers in play, the 8600 number and the 8700 number. Back to that 00 thing you've heard me talk about, guys. Very, very important. Now let's take a look at our 1 hour Fibonacci. The most recent last 2 week swing. Here we are. Drop to earth. Anything else? Yes, one other thing here before I leave the 1 hour. Note this baby right here. And just a little track that it's in right now. Okay, you can see the channel now pretty clearly. Let me just bring that out just slightly. There we go. So I have a nice channel now. Remember, even though it's a strong downward channel, there are pullbacks all the way along. In other words, for it to continue downwards, it's still going to pull back. Now let's drop to our 30-minute. Blow it out. See what we got going on. There's my price action now. So from Monday, open of the market, she dropped a little bit, went up, top of the trend line, and she's been steadily on the way down since. Now do remember we had that support level here at the 8700 as it bounced off it the first time, came back up close to the trend